Thank you, Angel. And Heidi ho, everyone. Happy Thursday to you. Last day of the trading week for me. And let's hope it's a profitable one. That will be good. Before we go with the pound trade, those of you who aren't in my Telegram group, actually probably wouldn't know this anyway because the Telegram group is where I place the order. Swissy Yen. Swissy Yen, I placed a trade this morning looking for a long above this bar here. We've got half an hour or just a little bit more, 34 minutes from now, there's going to be the Swiss monetary policy assessment. And I have now closed that trade. I closed it about 5 or 10 minutes ago at entry because it now becomes a gamble rather than a trade for me. So that is now GONE. I don't think I've shared screen yet, have I? Righto, there we go. So there's the entry level on Swissy Yen that I took this morning. And as I said, I have now closed that. Happy Thursday to you too, Paul P. At entry, which is pretty much bang on where you are right now. Entirely up to you whether you want to remain in there or otherwise. You might want to remain in for a little bit longer and hope it goes a little bit higher so you can maybe bank something and move your stops, the equivalent of that, whatever. I won't have enough concentration to do that because I'll be talking to you guys. So I have closed and you're now a little bit in profit or maybe just about there where I got out anyway. So that's a non-event for me. I will reassess, however, and if this statement or assessment news event is benign or neutral, and we do get above the daily pivot, come back and retest it, giving us the higher low that we seek always, then that's when I'll jump into this again. But it's now null and void. Righto, so let's turn our attention to the breakout trade. And we are now out of the one that we got into on Tuesday. The trailing stop was hit in decent profit. I can't remember exactly where it got hit. There. So our trailing stop went to here. Our entry was up here, as I recall, and our trailing stop was hit there, as I say. Are we in a range or are we not in a range is the question that we ask ourselves, because this is now the new filter that we've added to the pound US dollar UK open breakout trade. And look, there's an argument both ways. Yes, we're in a mini range. There's no question about that. Have we started a trend is the question. Look, I'm going to say no to that. Yes, I've got well, no, I haven't. I'm going to have a lower low. There's no question, but I don't have it at the moment. And I certainly don't have a lower high based on these two, which were the range that we were trading. So I'm okay to trade this in a range today. And the range, of course, is on the hourly chart. Ash and I are meeting later in the day, and by next Monday, we will have a new way to trade this. We're finalizing our deliberations on how to trade this. I'll tell you more on Monday about that, but we will be advocating that you can trade it, but at very small risk. Okay, so range today. The low of the range is at 1.3669, so our entry will be 0.6 rather. So our entry will be at 1. My pen won't work. I've given up relying on my memory. 1.3669 will be the entry for the short. The stop loss for the short will be 1.3687. And for the long, the entry will be at 1.3704. Work pen. Sad when the pen doesn't work. Let's try another one. Here's my ink pen, that'll do. 1.3704, I think I said. And the stop loss on the short, on the long rather, is 1.3688. Righto. Let me place those orders. So the buy, again, if you're joining us for the first time, this is a test system of trading a breakout. It is not something that we can rely on. So therefore your money needs to be kept in your pocket pretty much. What am I doing? I'm buying. Okay, 3704. Stop loss on the buy is 3688 or 1.3688. I tend to talk in the last four numbers only, don't I? Can be confusing, I guess. And the short is at 1.3669. And the stop loss on the short is at 1.3687. I think I've written there. I'll just double check that and confirm. There we go. Oh, doesn't like that. By limit, that's why. Should be a sell stop. Close. There we go. Likes that a bit better. Righto, let's work out some take profits, shall we? We'll go with the sell first because we're closer to that entry than anything. 1.3669. 1.3687 is the stop loss. Which means we've got an 18 pip risk factor, which means we'll take our first profit at 9. 9 under there is pretty easy to work out. 3660. And double the risk will be 18 pips, double the risk will be 36 pips, which will be 1.3633. Marvelous how my mind actually ticks over, isn't it? How close to entry are we? Not at entry yet. Okay, work out those from a visual perspective, and the first take profit is 1.3660, which I was just on. Bang on there. It's a first take profit for the short. Second take profit for the short, 1.3633. Come on. Come on. Very close to there. Okay, we'll see if this will go further south or otherwise. The TP1 for the long haven't been triggered yet, I don't believe. TP1 for the long is, haven't worked it out. Let me do that. 1.3704 to 1.3688. So the risk factor here in pip terms is 16. 16 becomes 8 for TP1, so 1.3712. And double that is 32, obviously, which gives us 1.3736. Rightio. There you go. There's the entry, stop loss, and take profits for today's breakout trade. Should we be triggered in? Looks like it may be short, but anything can happen anytime. Righto, updates. Aussie dollar. Aussie dollar, we haven't hit TP1 yet, and we've gone into consolidation similar to the pound because the US dollar hasn't made up its mind whether it's serious yet or otherwise. Our take profit level here is down here, 75.62. Yes, that's correct. So we've got a fair bit of work to do, but I think if we do get through this low this morning, then I would be pretty confident we'll hit TP1. And that, of course, is, hi, Lewis, how you doing? is the start of the ball game. What if it doesn't? Is probably the question that we need to ask ourselves. Where is the dollar index? Ooh. I've been playing around with my, and I haven't got it. That's a shame. I don't think I have. What, the Forex Factory? What's that going to give me? No, that's not going to happen. What's that going to give me? Okay, I haven't got my my dollar index chart up. That's a bit of a shame. I think what it shows is once again where we're through, but we're through resist. I'll bring that up shortly once Ash comes into the room, or he might even have it on his. But I'll bring that up shortly and show you why we are now at the point where this will either be a strong win, or we might need to reassess. But the basis of the trade was, for those of you who know the slingshot strategy, it was two things. And Lewis was pointing this out to us earlier in the week, or was it last week even? Maybe it was even last week, I can't remember now, where he was pointing out quite accurately that we had a head and shoulders on our hands. And as I said at the time, that is absolutely the case. And if we break the neckline and retest the neckline, I would be definitely looking to trade this short. But pursuant to slingshot rules or slingshot entry strategy, we also broke the trade line, which is indeed doubling up as the neckline, decisively. So that becomes what I call a dominator trade. It's a dominant break of a trade line. And when I get that, I just enter immediately underneath it, put my stop loss above it. In this case, it needed to be above the pivots to be absolutely wise, I suppose, is the word I'm looking for. Sensible, whatever you want to call it, prudent, conservative, maybe, all of those words wrapped into one. Anyway, as I said, if we get through the low today, I'm pretty confident that we'll get to TP1. And if that's the case, I think we're on our way here, and the Aussie could tumble quite a bit versus the US dollar. I don't see that being sustainable long term, but for now, the short term bias is most definitely with the US dollar, and I think that can continue for a little while yet. And as most of you would know, I am not a US dollar fan by any stretch of the imagination. That's for sure. The other one I was looking at this morning was, and this we're revisiting this from earlier in the week, is Euro Swissy. Now, Euro Swissy, and by gee, it's pretty much there now. I think I'll actually place this order. Where I put my stop loss is going to be the problem. Yeah, interesting. It was kind of one of two things. If you have a look at the daily chart, you can see a double cross on the weekly pivot. And I know somebody's going to suggest to me that this is a potential OCO, and you know what? I'm very, very tempted. So we've got a double cross on the weekly pivot and the trend line, which doubles as the top of my descending channel here. So it's a real level, no matter which way you look at it. And, you know, when I see that, I start to think, breakout, retest, double cross of weekly pivot, throw in the daily pivot there as well. There's got to be an entry here long. And on the daily chart, I'm fine with that. Yes, we're at around about DR2, and I certainly wouldn't tackle that on a 30-minute chart. But on a daily chart, completely different story. I think it's worth a small investment to put an entry above that bar on the daily chart and stop loss below the current daily bar. I think that's a reasonable position to take. But I also think it's a reasonable position to take an entry short below that 4-hour bar which is not a double cross of the weekly pivot, but certainly a break and retest of the weekly pivot. And it is dependent on where you put your trend line. But I always go with that high because it's got far more tests. Break, consolidate, re-entry, retest. And again, it's not just the trend line or the top of that descending channel. It's also a retest of the weekly pivot. So I can certainly make a case for both. And I think if we trade this on the 4-hour chart and trade the long on the daily chart, I think we might even capture one of them. Now, what we don't want, of course, is to capture both as bad entries. So we've got to really determine whether this is going to commence or stay in a range or otherwise. But guess what? In 19 minutes' time, we've got the Swiss National Bank and their policy assessment. So we can't trade it at the moment. Well, you can. You can have a gamble, and you could go OCO short on the 4-hour, long on the daily. That would kind of make sense if you want to gamble, if you want to roll the dice. I get that. So you could go long above here, stop loss below the current candle, right, the current daily bar, or you could go short here. And the problem now, of course, is where do you put your stop loss? I think it has to be above this bar as well, frankly. So I don't know if I want to take you guys through that process. I probably should, Ash, shouldn't I? How you doing, mate?
Oh yeah, not too bad. Not too bad. I was just looking at some stocks this morning, and there was one that came out with some really good profits. A company called IQE. So I thought, right, I better get into those. They're down 5%.
Okay, IQE, intelligence quota emphaticized.
Well, I don't really know what it stands for actually, but they are a.
I'm having a drink if you don't mind.
Oh no, have a drink, mate. Interesting company. They make semiconductor products for, but they are they make wafer kind of semiconductor products, which I think is quite interesting. You know, they make it for mobile phones and all sorts of innovative things. So I thought, I looked into them. I thought, actually, yeah, they're pretty good. I wouldn't mind a little bit of technology in my portfolio. So I looked at their numbers today, and they smashed it. They've had some cracking numbers, and that, and yesterday I saw a company called Softcat smash their numbers, and they were up 15% by the end of the day. But these are down currently 5%, which I don't really understand what's going on. Well, let's hope so. Let's hope so. Yeah. I mean, they're one of those companies that I think I'd probably quite happy to hold, regardless. So I don't mind that.
Have we got a few minutes up our sleeve?
Yeah, we do. I think we do.
I might place this OCO, hey? Just for kicks. Yeah. It's Thursday. It's Thursday fun day.
Yeah.
I can see it, so we might as well place it. Look, I absolutely stress, guys, if you want to follow this, if you want to trade this, it's got to be at super low risk. We're trading into news, right? News, heavy news. This is a Swiss national, this is a central bank announcement coming up. So the potential for whipsaw here is high. So we could easily get taken into both trades here and out of both trades. So you must take that and heed that warning. But I'm going to use the trade manager to do this because then I don't have to think about it. It'll do the work. So those of you who don't know how to place an OCO on the trade manager, here's how it works. Risk percent 0.1, that's probably apt. Actually, I don't want to put any money on this, but I do want to just point it out to you. Why can't I see allow OCO? Is that changed or something? Oh, enable OCO, right. So you scroll down to that, enable OCO, and you go true. Entry bar shift, we don't want to know about that. We want to go with, scroll down till you get to buy entry level 1. Yes, we want to do that. So we click that to true. Now the entry level 1 which is a buy order. Now it's not going to let me do this. Mate, can you give me the high if you can? Can you? Have you got a Euro Swiss chart that you can go to?
I certainly can.
If you can give me the high of the daily bar, that would be awesome.
Euro Swiss. Where are you, Euro Swiss? I'll just plug it in.
That is yesterday's
right.
daily bar, right?
High of yesterday's bar.
Yep.
Is the red one is 1.1076.
So we'll go 1.1081. That'll be our entry level one. So that's the buy order. The low of that bar, please, mate.
The low of the same bar is 1.1049.
1.1044 will do. Okay, so we've got an entry level. For entry level one, we've clicked true. We're going in at 1.1081 and we've got a stop loss level at 1.1044. Our second entry, and the other thing that we've done is we've enabled OCO, right? That's very important. So entry level 2 becomes our sell order. So we're going to sell at entry level 2. So that becomes true. The entry level will be on the 4-hour chart. I can probably do this myself, can I? No, it won't show me. On the 4-hour chart, Euro Swissy, mate, if I can have the low of the third last 4-hour candle, please.
Sure, the green one or the red one?
The green one.
The green one, yeah, I gotcha. 1.1047.
1.1047 becomes 1.1045. Yep. And the high of that bar?
The high of that particular bar is 1.1057.
1.1062 will do. Okay, that's all we need there. We now come down to, so we've got an entry level and a stop loss for both trades. Trading stops we don't know about. We'll do all that later. Trade expiry, we do need to know that. We'll go with end of, no, we won't. We'll go with, we'll go with end of day. So we'll put in number 1 there. We'll change that. Take profit 1. For now, we'll go with enable take profit 1, yes, true. And we'll go with proportional target of 0.9. And the reason I don't believe in going on 1-to-1, I just like 0.9 because it's less than 1-to-1. Take profit level, we don't want to know. Proportion to close, we want to close half at that point. And we want to move our stops. Enable stop loss TP1, yes, true. And how do we do that? Proportional stop loss, there we go. Proportional stop loss will be the same, 0.9. That should be all we need to do. We don't need to enable take profit 2. We don't need all of the variables. That's all we need to do. Click OK. It'll ask us a couple of questions. I'm going to put that on that screen. Buy at entry level 1, yes. Put that on that screen. Sell at entry level 2, yes. And we have our orders in the market. Okay. So what we're doing is we're going to buy above this bar. That's what we've asked it to do, with our stop loss there below that bar. And we're going to enter short. That's the buy order. We're going to enter short underneath this bar. And our stop loss is above that bar, which could have even been higher, but we'll go with that. So there you go, mate. We'll have a little bit of excitement in 10 minutes time, and we'll see.
Brilliant. Yeah. Well, so So we're playing the announcement here.
We are, and the big problem, of course, is if we get slipped into one, and then it goes in the opposite direction, and we get slipped into the other. We're in two bad trades.
Yeah,
which can happen, and that's why, guys, this has to be at very low risk, right?
Yeah, absolutely. It's one of those things that's well worth trying out. So we got the monetary policy assessment, policy rate. Yeah, and interesting. It might just be a damp squib, mightn't it? It might take
It
us
may
in.
well.
Yeah, just not do a whole bunch. I mean, they're
And
all under a lot.
Sorry, if you weren't in earlier, those who've just joined us, and you are in the Telegram group, you would know that I got into Swissy Yen this morning. It's now bang on entry. I've cancelled that, or I've closed the trade rather at entry, because I don't want that subject to the news. I'm okay with the very, very small risk on the OCO, but I don't want to risk this one on the news. So I've closed, and it's bang on entry right now. Up to you whether you want to risk it through the news or otherwise. Sorry, mate.
No, I was going to say it's it's kind of a who blinks first kind of game, isn't it? I was having a look yesterday at the Aussie. After seeing some of those Aussie pairs, and we should probably talk about some of these trends that have been happening, because there's been some pretty interesting ones. I think I'll watch the action from the sidelines. Yeah, John, I think you're right, mate.
Yeah, good idea, mate.
Yeah, I think you're right. I think that there's certain things that I think are of interest. Good morning, Lewis. By the way, next show will be at 7. Oh, we got plenty of time today. Thank you, Angel.
Thanks, Angel.
Yeah, there's yeah, well, it's an interesting one, John. And I was looking at the Aussie yesterday. I was looking at some of the Australian economics yesterday, and as I say, let's talk about some of these charts. Have you done for a little while there, mate?
Yeah, mate, I'm good.
Okay, so let's just have a quick look around now. We were just that was the Euro Swiss you were asking me about numbers, wasn't it? Yeah.
Yeah, I hope so.
Yeah, I was just thinking I might have been giving you Euro Swiss and you were trading dollar Swiss instead, but that's all right. Okay. Yeah, let's have a look, because I think some of these moves have been pretty interesting, and we'll have a look firstly at the Aussie Yen, because it seems to be a decent barometer for kind of the global market, equities.
It's a great market sentiment guide, isn't it? Really.
Yes, and we've seen it move to the downside. Now, what I quite like about it is that we are at it's definitely a buy zone here for the Aussie. We are at that lower end, and I looked at some of the economics and the fundamentals, and I thought, you know what, they still look pretty good. There's nothing wrong with the Australian fundamentals from what I can see.
No.
To really kind of suggest the move. Well, maybe it's not. Maybe it's nothing more than a genuine kind of retracement of from the highs, and I suspect it probably is. I don't think there's anything sinister about it. I'm looking at this as a potential buying opportunity with the Aussie, and it's just a case of picking the right currency pair to trade it against. And oh, look at that! That's a pretty solid line there. And then, not sure. Don't love the I don't love the top end, but the pretty solid trend line really that we've got with the Aussie, and it's Aussie Yen, and we're right on top of that. So we've got the Aussie Yen kind of in a buy zone, and nothing from what I could read anyway that would suggest fundamentally that the Aussie should be anything but a buying opportunity. Aussie dollar. Similar, we've got this potential head and shoulders pattern again in a buy zone. It's right along this area here. Looks like a pretty good strong level. I'm sure if we brought this up, we might be through that area. So not exactly sure. When you look at the weekly, could be a little bit further down on the weekly. But then we bring in some of the other barometers of global strength, if you like. And oil needs to be, constantly watched. So when we look at WTI, it's had a move to the downside, but it's holding on again now. I'm not so keen on the oil story, but what I would say is that so when it comes to the oil, I think oil moving further lower, I think is pretty good. There's a pretty good chance, and look where it is as well. I mean, I might even be slightly lower than that, but it looks like it's come back, retraced into this area, and that's now in a sell zone. So oil, you've got a green light to go on the sell, but I wouldn't be sort of stacking in too heavily, because I think yes, there is a blockage on the Suez Canal. Absolutely right. Yeah, which is interesting, isn't it? Because that suggests that there's going to be certain. I mean, I don't know how bad is it, John. I'm not sure. But that certainly suggests that trade is going to, that there's going to be a problem with certain trade, and depending on how long that goes on, that might 30 odd ships. Interesting. Interesting.
Sorry, I can't help but laugh. I was talking to a customer of mine this morning, and he was just paying his bill, and he said, "I've now got another problem." He said, he didn't say this, but I'm saying this. He also had a blockage in his Suez Canal.
So let's move on.
Sorry, that's a dad joke.
I'm not sure if
Couldn't
that's
help.
going to affect the price of oil, but it
Probably
might
not.
do. Depends who he is. So we've got certainly a potential retracement and some downside with WTI that we could potentially trade. The FTSE, I think, the FTSE's holding on. I've got a long on the FTSE, and I've stacked in a few orders down here as well, because I don't really care if the FTSE drops. I'm buying it up. The Nasdaq is just all over the place. There's when it comes down to kind of that growth story, it's kind of struggling to stay in that upper region, and we did see with the Nasdaq, you can see that. Not very clean anymore, but this area down here was starting to suggest that we were at an inverted head and shoulders, and the left shoulder, the right shoulder, it played out here. When you look at it, it played out there, but now it's starting to extend. As soon as it started to drop again from those upper levels, then the pattern started to get, it's now in question. I think that we're almost in a kind of in a new pattern here, and we've got a bit of a range going on with the Nasdaq. So a breakdown below here suggests probably quite a bit lower. A break to the upside would suggest that we're back to the highs, but now you're playing within the range. If there's nothing to suggest that we should be too worried, God, that's noisy out there. If there's nothing to suggest that we should be too worried about it breaking currently, pretty nice trading range to look for. Look from the lows to the highs, back to the lows again. So kind of going nowhere. So not really getting a strong message from there. Bitcoin is the other one that I think is of huge interest right now. Gold, we'll quickly mention it, going nowhere as well. So with gold and the Nasdaq being caught in that range, that is kind of suggesting that the bond story is quite prevalent with these two. That we've potentially got some inflation, which should boost gold, but the bond yields going higher is not good for gold, and it's not good for the Nasdaq either. And silver is breaking down. This particular commodity is in a bit of a mess here. And then we bring in Bitcoin. And Bitcoin again is breaking down. Now I don't know how low this goes when it comes down to Bitcoin, but I've said for quite some time that I wouldn't be interested in paying more than Elon Musk. Now maybe that's a little bit kind of overstating, really what I'd be prepared to pay, because if it comes to 44, then I'm prepared to start thinking about Bitcoin. If it starts to create a bottom here, then I'm interested, but I'm still not interested here. It's still too inflated for me. If it comes down to Elon Musk price, which I believe is at 35, then I'd be really interested. I probably wouldn't even worry about a pattern. I'd probably just trade it. But anywhere in this region, I think Bitcoin becomes the buy zone. Anywhere above, for me, it's just still a bit too lofty.
Should we watch this news trade, mate?
Gosh, mate, yes, yeah, get it on.
Okay. Coming up. It may not do anything, of course, but if it does, we're in a position to catch one of the moves anyway. Let's see how we go. I'll go to an hourly chart. You can probably see it a little bit more there. There's our entry for the long. There's our entry for the short. Boy, gee, look at the reaction. Going nuts. Nothing's happening.
Yeah. I thought that might be the case with the S&P.
There we go. We'll watch the 30-minute chart.
Yeah.
Oh, look at that. 2 pips.
There we go, mate. Are you in this already?
No.
No, not in yet. Okay.
No, we don't get triggered till here or here. Not sure why I was worried about the Swissy Yen trade. It is a statement, of course, so it may take some time to unfold. Or I think you can go back, mate. There's not much going on there.
Well, to be honest, I mean that Bitcoin was kind of the last one I wanted to look at, really, because it is one on the move. Now, Shukri was saying on Tuesday that he knows when to buy Bitcoin because the IPO, I think, for Coinbase, is it? I think he was talking about, or certainly one of them didn't go off, so we might be looking at that happening next week instead. Which means that we might then see some movement in Bitcoin. We might see some upside in Bitcoin after that. So I guess there's some
has
opportunity.
It retraced? I don't even follow it.
Bitcoin has retraced.
To where?
It's currently at 52, kind of around the 52 area.
And where'd it go to?
I mean, at one point it was all the way up at 60. So it's
right, okay.
It got to 6,200, and it's currently down at 52. Just around about 52 level.
Isn't the golden rule for a 30% retracement? Isn't that what they look for?
Oh, it's interesting, isn't it? You say that, mate. Yeah, I mean that would be certainly very bearish in any other market, but I think with Bitcoin, yeah, they probably would want to see a bit of that. So it is currently down from its highs around about 12%, a bit more than that actually, about 13% down. So yeah, it's probably got a little ways to go. I would love to see it down somewhere like 30% would be brilliant. I mean, that, we get to the 30% mark, we're in pretty good shape. I'd be really interested in buying Bitcoin if it went from its highs down 30%. Then I'd be interested in some expressing a view in some form or another. The company that I look at is the one I was telling you about yesterday, Argo Blockchain. And Argo Blockchain, I wanted them down at 160, and they are currently at Argo Blockchain at 215. So they're down 5% today. Haven't fallen quite as far as I'd like. I'd like them down to around about 160. So they've got some room to go potentially. But there's a bit of weakness across the board with cryptocurrencies. Ethereum's also down quite significantly as well. So, but yeah, Bitcoin, Ethereum, Cardano. There's XRP is back down again today. So the crypto space is easing off, and I wonder if Shukri's right about that IPO, then it could be next month even that we're really looking at a long in Bitcoin. But he's been calling for this for a while. He did say that Bitcoin seasonally is and these types, the majors, if you like, were due a correction, and he looks like he's right on the money with it.
Well, as all things, mate, nothing goes straight up, nothing goes straight down.
No, absolutely not.
You've always got to have those. Always got to have pullbacks because
exactly
the nature of the beast, isn't it? People are going to take profit. That's one thing that can do it,
Yeah.
And the other way is people, the thing reaches a whole number, or I can't say a previous resistance level because there aren't any, but it'll reach a level where somebody has gone, okay, it's not going any higher than that, so they sell it.
Yep.
Those things combined will obviously drive it down for a little bit.
Thank you, John. So yeah, John's saying that people selling to buy the IDOs on the coin list. Now, mate, I remember yesterday we were talking about bringing Lewis on. Was that?
We were.
Lewis, did you want to come on, buddy? Can't remember what the subject of conversation
Well,
was now.
it was last week, so it's probably not relevant anymore. But I'm sure
Awesome.
I'm sure you can tell us.
Let's unmute Lewis then, and if you've got a camera, even better, mate.
Angel will do that, I'm sure.
Hi guys.
Hello, mate. How are you doing?
G'day, mate.
Goodness me. Oh, you're looking like you're out and about in safari or something. Where are you?
Let me see. Where am I? What is
Is
my
that a
picture
raptor
here?
you got behind you, mate?
What is that? Let me take a look. What is my picture? I can't even know. Oh,
Don't know
okay,
where
okay,
you are.
right. I went for a little trip to this place called Langkawi. It's one of the island in Malaysia, something like
nice.
a Penang, you know, or something like a Phuket kind of place.
Oh, so that's one of Shukri's relatives then in the background.
I think so. Is that the one? I forgot to say hello by then. How's everything going?
Yeah, things are going good, mate. Things are going good.
Yeah, just now Jeff was mentioning what we're talking about. I remember we were discussing about some cable, you know, ranging within the, I mean, in cable.
Yeah.
And we were talking about, you know, what range. Because I put here, I remember I see is that we were talking about the range within the Fibonacci range of within 38.
Oh, that's right.
3.2 and 61.8 level. So I was talking about when the price was within this for the past 2 or 3 weeks, and when you get to the top, it bounced the bottom, and then after it go back up again.
So
Yeah.
was that only
correct,
relevant
right.
last week, or you've done a little bit of work on that and that's relevant?
Okay. When what happened is that after we talked about, I think that was last Thursday.
Yes, it was. Yep.
Last Thursday. So after we spoke, I put in a trade, you know, because the price was at the top at the time. So I put in a trade after the show. I think it's in the evening, Singapore time, and then it went down.
Yep.
And in the same night, I got TP1. And then the next day, it bounced up again and took me out of the trade. And I learned a lot from Jeff is that, you know, it comes down and retest the line and all these things. So on the next day, Friday, it came up, and then I took a trade to go down, and it was triggered below the monthly pivot, and then go all the way down to the 61.8 Fibo line. And I was anticipating whether should I take up, you know, should I close the trade, but I decided to take my TP1 and let the other half continue to run until it hits the ascending trend line that I draw it in my daily chart. And I decided, you know, because this is a very significant level point, so I closed my trade. The lesson learned here is that I should have leave at least a small portion of the trade running, because what happened next day is that it actually break the trend line and go for much more to the downside.
Yeah.
And that actually I should at least make another 100% from the downside.
Do you know what? I think this is really interesting, and just hearing the way that you're talking about it is what I'm getting is that on this particular trade, you should have traded it a different way. But my challenge to you would be to say, how would have this worked out if you'd done the same thing over 20 trades? Because the problem is if we just kind of go on the last trade and say, what I learned was to do it this way, it might be completely different next time, and it probably will be. So over the last 20 trades, I mean that would be, if you like, the homework would be to say, right, okay, now these were the parameters for entering. What would have happened if I'd entered and managed it in the same way that I would have got this one? What's my profit, and would I have eventually got taken out? And the reason I say this is that what Jeff and I have been doing over the last couple of weeks is doing the statistical probabilities on the pound trade, and we're going to share those with you guys pretty soon, and also show you how they've been done as well. You know, we kind of want to put it in the broadcast group so you can see how they've been done. And what's quite interesting is that there's one particular trade, and there's a couple of these, but there was one particular trade that went up 15%, and if we'd seen that one and taken and a lot of the other trades that we would have, if we'd come out at 0.75%, so not even 1%, we come out. If we come out of those 0.75%, the majority of them, you know, make money. But a lot of them, because they only get to the 0.75%, a lot of them would have just got stopped out, and then you lose your 1%. So if we take the 15% as our benchmark, then we could be in, you know, actually quite a lot of trouble, because most trades just don't go there.
You only get 1 in 100, which doesn't.
Yeah, well, yeah. Well, you need, well, this is the thing. You need at least 1 in 14, otherwise you're not going to make money overall. So that's really the question: is have you done the work on this particular approach over 20 to 30 other trades?
Okay, I did quite a number of trades over the past. Okay, let's take 1st of March as a reference point. All right. For the past 19 trading day, including today. All right. I think I took about close to maybe 100 trades.
Okay.
All right. What I can say, I did not take a record on every single trade, but over the past 19 trading days, I achieved 0.5% profit or more.
Nice.
For 16 of the days.
Okay. And what happened in the how many trading days?
16 of 19. That's awesome.
Out of 19 trading days, I hit at least 0.5% or more every day.
On the pound dollar.
On the pound dollar.
Okay. And what was the strategy? The approach was different.
Sorry. I'm sorry. For the the total number of trades, pound dollars or other currency pair.
Okay.
Using the similar approach.
Okay, interesting. Okay,
yeah.
All right. This is getting good, mate. All right.
Yeah. In fact, some of the day I actually on the average I got slightly over 0.75% on the average for the past 19 trading sessions.
Nice.
Awesome.
And when you say the similar approach, does this involve trading stops, or does this involve just setting a target and leaving it?
I set a target and leave it. For example, this pound trade that I was just mentioning.
Yeah.
My approach is 2 to 1.
Yep.
And once I hit that 2 to 1, I decide to close my trade, and that's where after I close it, it continued to go down for another 50%.
Right.
Yeah. So I managed to change my approach a little bit and follow what Paul B has mentioned. You know, at least keep a 0.01 lots to run it. You know, you never know what will happen.
That's very true, mate. So when you say other currencies with a similar approach, are we talking that you traded the euro dollar, the Aussie dollar, all on that breakout time frame, or on the 8 o'clock time frame?
Yes. In fact, I have did this little observation, and I have tried it last couple of nights, and it was pretty successful. Now, it was Nasdaq.
The Nasdaq.
All right? Nasdaq. All right. I've observed that, you know, sorry, not Nasdaq, the S&P.
S&P. Okay.
S&P. Every single day for the past 2 weeks. So past week, 10 trading days, 7 out of that 10 trading days, based on Singapore time, after about 3 a.m. Singapore time, the Nasdaq, the S&P will dive.
What time is that in your time?
That's US close.
Singapore time's about maybe 2 a.m. to 5 a.m. region.
Okay, 2 a.m. So that is.
It's about US close, I would imagine.
Yes, about US, about maybe 2 p.m. to 5 p.m. Yeah, it's about their closing. All right. And I observed that 7 out of 10 days, the price the index will come down while I'm sleeping. So what I did, So what I did was I actually, I look at the chart and I take a certain stand and I put in the short trade and I go to sleep. And I was jokingly talking to my trading pal here that tomorrow when I wake up, I will have I will have breakfast money.
And were you right?
I was right. I didn't manage to do it every day because the setup was not perfect.
Yeah.
I will not say perfect. The setup was not good enough. So I only did it for 1, 2, 3, 5 of the 10 nights, and I did keep back with some small little profits for my breakfast and lunch.
That's really good, mate. That's really good, because
Yeah.
that's what this is about, isn't it? It's about using the markets as a bank account and just getting better returns than you would get from the bank. And I think the way that everybody looks at it really when they first start trading is, I'm going to make 10% a month. I'm going to double my account every year. Well, that stuff doesn't really matter. Especially if you've already got a job. If you've got a job anyway, what you're really looking for is just some extra subsidy, and to enjoy the markets and use the markets for something else. I mean, one of my favorite ways to use the markets is to make some money out of it and then put that money, that's a profit, into an investment that's going to hold and pay dividends, and then go back again, trade it a bit, put it in the investment, trade it a bit, put it in the investment. So, and then you can actually start building up your little pot. So I think this is fantastic. I think it's really good stuff. So you saying about breakfast money, any time that we are getting, and I call it free money, but of course it's not, because you've done the work. But any time that you are getting a return on your money, which is just sitting there dead, it to my mind is hugely positive. And that's the way that people should really first and foremost look at trading, rather than sort of like trying to hit the ball out the park, because it's just not necessary. The ball can be hit out the park, as I say, with your investments just sitting in the background, and in 10 years time, you start to really build up a decent pot and pool of money, which are just giving you the dividends and stuff like that, that you don't have to do anything about, the other people are working for you. So I think this is brilliant. I mean, I want to explore it further, but I feel like we need a bit of a kind of a session where we break down this whole thing into an Excel spreadsheet, which I presume is probably going to be a bit boring for most people. But I'd really like to do that. I'd really like to get the actual numbers on this stuff, because we could be talking about using Jeff's approach to trade the pound, but actually figuring out that, as you've pointed out, that there might be, if not better markets, at least other markets that this same approach can be traded on.
Yes, certainly.
And also maybe other strategies, by the sounds of what you're saying as well, that could be of interest.
Well, there's an idea, Ash, and I mean, we had this idea like months ago, and that's what the Trading Buddies was all about, really, wasn't it? We were going to discuss different ideas and then go out of this session into a separate session and explore those ideas and go through the charts and say, well, okay, here's how we deal with this. Here's how we're going to work out if that's going to be successful. And if it's not successful, can we change it so that it is successful? Which is exactly what we're doing with the breakout trade, right?
Yeah.
So I think that's worth exploring. And Lewis has come up with an idea, and I'm sure everyone else has got probably ideas in their head that, well, I've seen this happen, 5 times out of 6, and I think it's worth exploring. And I believe that we should make a separate session, free, and explore those things.
Yeah, I like that, mate. I mean, I'm don't get me wrong, Lewis. I'm not particularly good on Excel, but I can get what I need out of it, and I do really like it. I do really like sort of like putting data in Excel and see what it churns out, because I think when you see the numbers in black and white, and that they are telling you what to do, it takes the emotion out of trading. It takes the emotion right away from it, because you know that you've done the numbers, and actually when you miss that 15%er, you don't care, because the numbers said to you should always take profit at 1.5% or a quarter or 0.75%, because over the course of 30 trades, that's where the money is. So I think you're right, Matt. I don't know when we organise this and how we do it. Maybe maybe it becomes our Thursday session. Maybe it's one of our sessions. We just kind of get down to business with this stuff. I mean,
yeah,
the only thing is that I'm not sure whether it's something that should go out on YouTube. I think it's, you know, more something that as you say, completely for free, but for kind of loyalty members.
Yeah, keep it in house with our loyal
yeah,
people. Yes.
Yeah.
True. Agree.
So yeah, I don't know, mate.
Let's do some. We'll have a think tank on that.
Yeah, we'll have a think about when we can put the time aside. But I think this is really cool, mate. I really like it.
Yeah.
Yeah, I don't know whether we could do it on a Thursday. Maybe we cut the show down on Thursday and half of it on YouTube and half of it on just on a Zoom room or something.
You can do that. I think that will be very much helpful.
Yeah,
for a lot
look,
of people. Yeah.
Let's think about it. We might be able to do, and one of our ideas was, let's do a Friday session on NFP day, so we can set an NFP breakout trade or something like that, which is, you know, completely boring until the event. So maybe we can spend an hour around that.
Yeah. And this is the thing. I mean, you know, make no mistake. I mean, this is the other thing about doing it on YouTube. Make no mistake. This stuff is pretty tedious. You know, Jeff and I have been sat there doing it for a couple of weeks now, and it is a bit tedious. But it's the end result which is the good bit. So it won't be for everybody. But most people probably won't want to come in the room, or if they come in once, they probably won't come back. But I think we need to make no apologies that this is about trying to find the data that sort of says, actually, this is a really good way to pull some money out of the market, because that's, you know, we don't have to stick with one strategy. We can have our core strategy, but we just want to pull some money out of the market on a regular basis.
Actually,
thank you, John.
Actually, what I found out is that sometimes it's not so much of the strategy, but it's some pointer that I pick up during the so-called chit chat session. You know, when you and Jeff and maybe other guests was talking about, you know, some trade or whatever. Sometimes I do able to pick up one or two things from it, and I can just try it over onto the trades. Like remember yesterday, you're saying that you want to put in a trade, a hedging trade with Nasdaq and Macaron or something. IBEX, yes, that's right.
Yeah.
And remember I mentioned that Nasdaq was
diamond.
Nasdaq was having a trap in a diamond.
Yeah.
And that's where I decide to take a trade against what you have done.
Okay.
And exactly, I woke up with some breakfast money again.
Well, it doesn't sound like you took a trade against what I did, because I traded the low to the high, right? And you were probably trading when it got to the high.
Correct. That's right.
Cool.
I actually traded. Let me see. I actually traded when immediately after the session, the yesterday session.
Yeah.
The price was climbing, and it actually did the lower low, or could be head and shoulder. And that's where I took a trade.
Have you got that chart, Ash? Maybe it.
Actually, let's talk about that for anybody that wasn't in the room yesterday. Let's talk about that, because that's a really interesting one, and you were right on the money, Lewis. And I don't know if you remember me saying yesterday, but that you're absolutely right. It wasn't a diamond pattern, but I was only looking for a short-term trade.
Right.
Let's talk about what I was doing, because it's quite a nice trade what I was attempting to do yesterday, which would have worked out, but I messed up my calculations on the percentage, and it's really important we get the percentage right, because if we don't get the percentage right between the two products, then we can get in a lot of trouble. So I ended up having to close my position in the IBEX. I couldn't get the Nasdaq one on. So anyway, it was yesterday, and that would have been here. That would have been here. Is that right?
Yeah, somewhere about
yes,
there.
It was.
Yeah.
It was here.
Yes.
It was here. Okay. Actually, let's not worry about. The only reason I wanted to get these pivots on was because I wanted to know what time it was. So let me just change this back to clean. So what I was doing is trading the open, and I was trading the Nasdaq because some of the story was, in actual fact, the first thing that Lewis was talking about, which he was absolutely right on, is the overall pattern with the Nasdaq is a diamond shape, and the diamond pattern is very negative. You know, it's a very, very negative pattern. It's very bearish, and they don't happen very often. But when they do happen, if they end up playing out and breaking down, then the product in question can be in all sorts of trouble, because if you look at the diamond pattern, then it ends up potentially playing out the whole measured move is you know, really from I do it from the top line to the bottom line, but some people even do a measured move down to the two corners, which, you know, which is even lower move. But if we were to just assume what the breakout was going to be about here, then that would lead the Nasdaq down around about 10%. You know, that's around about a 10% drop if that diamond pattern falls out. So Lewis was talking about saying, well, we're in a diamond pattern, so why are you trading this long? But what I was looking at is a short-term position yesterday to push us up into this area here. And what I was saying was, if I buy the Nasdaq, now this is the 8 o'clock bar, this is the UK Open. If I buy the Nasdaq here, but at the same time sell the IBEX, which was this one here, then I think that the Nasdaq is going to outperform. Even if they both go down, I think the IBEX could probably fall further than the Nasdaq. But if they go up, then the Nasdaq will do better, and it would have worked out. You know, for an hour, the IBEX fell down around about maybe 0.75%. You know, in the morning, and the Nasdaq jumped to around about, well, that's probably about the same, actually. It probably jumped up. So you got a 0.75% swing. So you got 1.5% of the trade there, if it goes in your favor. So this is where I was aiming for. But then you wanted to see whether you could go on a short somewhere in this area, and you said that there was a lower high. On what time frame did you see the lower high? Is this one here, was it?
Yeah, I'm looking at, actually I'm working between the H4 and the H1.
Yeah.
So when my trend line is slightly lower than yours. So actually when at about in the early evening, it actually, after the session, it actually hit 1-2 hours later, actually hit the trend line. Yours is yeah, correct. So when I hit it, I say it's time to look at it seriously. So, but there isn't a nice setup in the H1. So I went to H4 and I took a trade in the evening, and it triggered in below the okay. I have my 200 EMA in my chart. So when the price go below the 200 EMA, I say it's time to go enter. So I put in a trade. Especially it's also forming a what they call an inside bar. So I took a trade below the H4, the last green candle from the high.
This one here?
Yeah, this one. Yes, I took a trade below the green candle. Yeah, and that goes all the way down, and I closed my trade almost slightly above the trend line.
Nice,
actually, my bottom ascending trend line is slightly higher than yours. I took
Do you know, it's because I'm looking at the futures.
So I took it. I think I took it at the bottom of the second largest red candle. So I closed my trade, and I have money for breakfast.
That's really good, mate. I mean, that's a good 2% drop in the Nasdaq, and
yes, but I took a very small trade. I took just a 0.1 lot size. So you know, yeah, it's good. It's a good feeling.
Yeah. Well, you know, as I say, all we're trying to do is continue to make some money and move the chains, really, isn't it? And the thing is with this is that you know, I wouldn't want to hold on to any Nasdaq positions right now. I think that the US market probably is a little bit overblown, and this, you know, just so everybody's aware, what's probably happening right now is that there could be a rotation. So every market, every sector, every stock has seasonality, if you like. The different cycles, and what we are potentially seeing is the cycle away from growth stocks, which is expressed with the Nasdaq, into value stocks, which is expressed in the Russell 2000. Now, the Russell 2000, I think, is a really interesting one, because this is where you can say, if you believe in value over growth, then what we should be doing is looking for a Russell 2000 long and a Nasdaq short. And you might have to wait on that for some time. But this is an opportunity, and because the Russell 2000 is down at this level here, the Nasdaq is probably also in a buy zone right now down here. But there's no doubt that if you traded the Russell 2000 versus the Nasdaq from the 15th, you'd be down. I mean, that's down what it looks like it's down about 10%. Is that right? It looks like it's down about 10%. I think it is. I think it's about down to about 10%, where the Nasdaq since the 15th is currently down. What looks like around about looks about 3%, maybe 4%.
Very small, yeah,
very small. So you'd be losing money, and actually quite a substantial amount with the Russell. So it's not whether you're wrong; it's whether your timing is wrong. And this is the thing, when to trade the Nasdaq short, and this is where it could get interesting. If the Nasdaq genuinely shows some signs and signals of it coming down, then trading something like the Russell 2000 long, or even the S&P would smooth out the risk as well of trading that, because the S&P since the 15th is not down anywhere near as bad. I think the 15th here, S&P down about. Looks like about 0.5% or something, or maybe not down by much, maybe 5% actually. So not down by much, but I suppose the Nasdaq's still outperforming. But you'll see this quite a lot. If stock markets are going up, if sentiment is good, the Nasdaq's a great place to be. But if sentiment starts to collapse, the Nasdaq is a great place to be short. And to protect that position, it's better, really, in my opinion, because the Nasdaq's very volatile. It's better to protect your position by going long on something else, and it's just picking the right one. But look at what's been happening to the VIX. It's just dying a death down here. It's just not doing anything. There's no pickup in volatility. Which makes some of these moving parts quite interesting, which makes the Bitcoin story quite interesting. It makes the Ethereum story quite interesting. We are seeing some, if you like, some of the risk on products losing a little bit of money. The money is actually coming out of some of these risk on products. I think John's probably right about the fundamental reason that people are coming out of Bitcoin and Ethereum, and it's certainly Shukri's kind of area of expertise. But we have seen Bitcoin go up at the same time as the Nasdaq and some of those risk on things recently. So I think that it's probably further expressed that way. But yeah, well, I mean, we'll see how this particular one plays out. But really, what I'd really like to do is get down to kind of pulling out some of those numbers that you've created. I think your approach and the products that you've chosen could be really interesting, mate. And I wonder whether we should be looking at that a bit further. And Jeff's breakout strategy with the pound has always been of interest, but I tell you what, there was been one that I learned. It's one of the first strategies I learned, and I don't know. And if people want to start testing this out, and I might do the same, then there's a strategy on the FTSE 100, which was the 11 o'clock strategy, and it's the same deal where you pull up a chart of the FTSE. Let's bring up FTSE so you guys can see it. You pull up a FTSE 100 and you mark off the open, which is here. Let's do it on a 15. You mark off the open and you mark off right the way up to 11 o'clock, which would be, oops, no, sorry, that's not the open. That's the open on the 10 o'clock bar, which is there. And you mark off 11 o'clock, which hasn't happened yet. And you look at the range. So let's say we're still within this range by 11 o'clock. this range is currently around about 60 pips, which is nearly 1%. And then you just put a buy order in the highs and a stop loss in the list. So exactly the same. So these strategies, you know, are all over the place, and in a way they're the most simple ones for us to analyze, and really simple ones for us to trade as well. And what we'll probably find is that we can move from one product to another product to another product to another product, depending on the time of year, depending on the type of chart structure, depending on the type of news. That there's lots of variables that we can then add. But I think if we have a starting point where we start looking at some of these breakout zones, I think we could be in a really interesting place. But Jeff and I'll have a chat about it and see, you know, if it's going to be possible to do. But thanks for sharing that, mate. It's,
no problem.
I think
That's
what this is about.
Just like some time back, I think about a year back or a year and a half back, gold. Every single day between the time of Singapore time, between 8 p.m. to about 10 p.m., there's a wide swing in the gold.
Right.
Yeah. And that was during a period that I actually also learned a lot about this kind of breakout, you know, that
I think that's really cool, man.
Take advantage of it.
We should use gold. Let's look at gold. Let's look at oil. Let's look at the pound. Let's look at maybe the euro. We'll look at the indices, some of the indices as well. I think this is really interesting. What a fascinating conversation we could be having. As I say, it'll be tedious when we get down to the numbers, but I think it'll be interesting.
Yes.
Melvin, Jeff has gone through the Swissy Yen, but he's a gentleman, and I'm sure he'll do it again for you.
Yeah, look, nothing's changed, Melvin. As soon as you guys are finished, I'll go through that for sure.
Nothing moved in the Swiss.
Nothing moved in the Swiss.
Nothing moved in the Swiss.
No, the news did absolutely jack.
Yeah.
It's no news.
Yeah, I mean it's the Swissy, isn't it? And the thing is about these currencies is that they're waiting for the big guns, aren't they? They're waiting for the you know, what's going to happen in the States and you know, what's going to happen in Europe before they probably commit to anything. I'll tell you what's really interesting with the Swissy. The correlation with gold is really interesting with Swissy because, you know, I was when I started trading and everybody sort of said about the Swissy and gold, I thought that was because they had more gold than anybody else, but it's not the case. What they've got is more gold per capita than anybody else. So there is still this correlation between the two, and you know, we didn't see gold. We haven't really seen gold do much. Now, obviously, this is a completely different, you know, separate statement, and it will only affect the Swissy potentially and not gold. But they are waiting, you know, that these smaller countries, really, the smaller economies are waiting for the big guns to move because it's so important for them to kind of get their exports sorted. And that's what their economy is based on. So that's probably why it's, you know, they probably went, well, you know, still nothing really to report. We're still the same. We're still staying exactly where we are until, you know, they wouldn't say it, but until we see the Fed flinch.
Yeah.
So we're going to go through the trade for Melvin, Jeff.
Sure thing.
Thanks, Lewis.
Yeah, Lewis, thank you, buddy. Really nice.
Nice chat.
Really good. And I think you've probably opened the door here for what we really wanted to achieve with trading buddies. That's exactly what we're trying to achieve, where somebody's willing to share what they're thinking, just like we do, you know, and let's analyze that. Let's pull it to pieces and see if it can work. Absolutely.
Yeah.
What it's all about.
I think that's benefiting to a lot of people.
Awesome. Okay, let me go with Swissy Yen. And Swissy Yen became a bit of a gamble rather than a trade for me, Melvin. So for that reason, I closed the order at entry, or I didn't close the order, I closed the trade because we're already in the trade. Now, the news has done very little, but you'd be still in profit if you'd held on through that news event. You can see there's the news event there, which has gone what? A whole 20 odd pips and nowhere. You know, it's tantamount to a doji bar. And so is the market. The reason I took the trade in the first place was because, you know, this is a ranging pair. That's what it does, you know, because primarily they're both risk off currencies. at the moment, and if you go wide, you'll see a very strong indication of that, right, on the monthly chart. At the moment, and it's hard to get this in perspective because of this 1st of January 2015 event over here, but you can see it's broken through the descending trend line, and it's yet to settle below that. So it hasn't come back below that. So really, we've had a break and a retest, new high, and so far new lows. So I thought that the trajectory should be long. We've gone into range. We put in that new high. Okay, it's a reject bar or a high test bar, but on that chart, we're still above this trend line and haven't gone to play out the false break. So there's been no close below this level here, and more so, even more so, below that trade line. And therefore, this rectangle is still in play for mine. And the next thing I look for, of course, is a bounce off the bottom going to the top. I don't know that I'm willing to trade it further than that, but that was the premise of the trade. Now, we got a beautiful rejection bar, and had that been a white-bodied candle, I probably wouldn't have taken the trade, but it isn't. It's exactly what I'm looking for a black-bodied bar that is a rejection bar of the level, and this was exactly that. So it's just an automatic, okay, I'm interested scenario. Normally what I do is wait for a candle to go above the entry and come back and retest it. Now, that may well be the case here today. We may get that. It may come back to the daily pivot. And if it does and gives me a higher low in that area, then I'm all over it again. But at the moment, I'm out of the trade because it was news. There was a news event and Swiss National Bank event nonetheless. So it had the potential to move the markets without any form of technical direction, all about fundamentals. And when that's the case, I think it's a toss of a coin, and I don't really want to be involved in coin tosses. My father used to do that, and I used to have heart attacks because he had big money on it. Like, wow, you maniac. But anyway, that's in the past. So what I'm looking for, and if you're still in this trade, then happy days. I've got no problem with it because I think the direction is still to the high side. And do I wish I was still in? Probably, because I think that was probably a nice place to get in. But the next best place to get in is on a higher low. And if it goes back below entry and gives me the higher low, then I'll certainly be looking to trade that. So I know that's not of much help if you are still in the trade. I don't see any reason now to close it after the news event. So hopefully it goes to the moon, as it now becomes the vernacular that we speak about often. Look, I've really got very, very little to share with you in terms of potential trades because there is no market here right now. The market is doing absolutely nothing. We had a little bit of movement on the open, but we haven't been taken into the long. We haven't been taken into the short on the pound. Euro dollar, which is now back on my playlist, if you like. It's the one I really love to play most of the time. And I haven't done that for quite some time because at UK Open, we've always been in the show and trading the pound breakout. But I love Euro dollar 30-minute charts at the moment. I don't love it at all. There's absolutely nothing to do. We're at the bottom of the, or at the low, the ultimate low. If you look at the big picture, then it looks very, very clear to me that we're headed down to here at some stage. But I just can't say, righto, let's jump in short now after this bar and this bar. Yes, maybe this goes straight to here. If it does, it does. It'll go there without me, unfortunately. If we get a retrace, different story. I will look for a lower high and go again. But at the moment, there is absolutely nothing to do here. With the other, look, I had a heap of watch lists, and I'll quickly go through those. Aussie Kiwi, we were looking to trade long. We missed that on Monday. We missed the breakouts and shouldn't have, I've got to say, because we had a nice little setup, break, retest. Risky, of course, because we're at the top of the rectangle, but we did point that out and we didn't take trade. Aussie CAD, impossible. Unfortunately, we were looking to trade this short, and we were looking for a false break off here, or even a reject bar of the weekly pivot, I think was the first thing we were looking for. We got the false break, but we didn't get a retest, and that was the issue there. So we could have caught all that. All we needed was a little retest of that trade line in the weekly pivot, and we would have been good. Euro Swissy, and again, there's nothing to do here right now. Euro Swissy, we were looking to trade that, and we did trade it, and we got into that move, I think, and got a TP1, and that was it from my memory. We were looking to trade it short. Where was that Monday? No, maybe we didn't get into. I can't quite remember. Anyway, it hasn't happened. Interesting, however, that we do have, let's go a bit wider, we could still trade this short.
Yeah, that's what I'm thinking of. It's opportunity to open up for a short.
Yeah, interesting, isn't it? That's the one that we've got an OCO on, right? We've got an OCO on this? I think yes, it is. So we're going long on the daily, and we're going short on the 4 hour, right? Because we've got that beautiful little false break sitting there. I think that's the way I'd prefer to go, you know, really do. So if you haven't got those numbers, I'll post them in the Telegram group for you. I think that's still worth hanging on to, Euro Swissy. Look, I could go through the whole lot, but really there's been absolutely nothing happening. We've missed 2 trades. We missed Aussie Kiwi long, and we missed, there was another one. Can't remember what it was now. Kiwi CAD, we were dead set wanting to trade the range here. That was interesting. And didn't even get a look in. It just went smash straight through there. Dollar Sing. Dollar Sing still in the range. Yes, that's still one of our opportunities. Look, if you wanted to, you could still trade that short underneath that bar, but we've since had another high. So I'm going to have to wait on that again. Maybe move the trade line to there. So I'm still probably looking for a poke out the top, back underneath, maybe come back to the daily pivot, then retest it, look for that lower high and go short. Aussie Dollar you know about, we're in that, looking for TP1 still. The trades that we're still in, pound Kiwi, that's now what, 400 pips to the good, and no reason to do anything there. Hang on to that one. Euro CAD, how are we doing with Euro CAD? Euro CAD still looking pretty strong for us as well. I think we're now way past. That's our entry level there. Nearly 600 pips to the good on that one. We've been in that for 2.5 months, guys, and still in positive swaps, I'm pleased to say. Really, I don't have much to do. It's just hang on to the Aussie dollar. If you're in Swissy Yen, I've got no reason to get out, but I'll be looking for another entry on that. And that's probably about it, guys. Those ranges, if Dollar Sing plays ball and comes off the top, look for a lower high there. Pound Swissy was the other one, wasn't it? I don't think I mentioned that. But Pound Swissy is, again, a range trade, and we're looking for a higher low on Pound Swissy. Again, we've got a trade line sitting here. Price is doing absolutely nothing at the moment. I think we've got to get above this area and retest it. You could, if you were so inclined, place an order above that bar, but I don't. That's not going to be me. I'm going to wait for a better scenario. So let's break here, retest maybe, then we can go long on Pound Swissy. That's all I got, mate. Nothing outstanding, I've got to say. It's very much a case of watch the grass grow at the moment. There's nothing happening.
Yeah, fair enough, mate. Okay, well, I'm in a similar-ish position. I've got obviously one trade on in a stock that I don't think anybody else is going to be that interested in, and I'm waiting on Bitcoin to come down a bit further so I can ease my way into Argo. But aside from that, I'm in a similar position. I'm just waiting on things. The FTSE 100, I have got long positions on the FTSE 100 all scattered around, very small risk, and just going to edge my way into that market. I still think the FTSE's got further to run this year, so I'm quite happy to see if I can get a bit more upside out of the FTSE before maybe changing strategy. Yes, Lewis.
How far you reckon FTSE will go?
Well,
based on your theory.
On my theory, so I don't see why the FTSE shouldn't get back up to around about the 7,000 mark. You know, we're so I think another 10%. Well, actually, it's a bit more than maybe more like 5%. So I think another 5% of the FTSE, I think, is achievable. I don't see, you know, I don't really see too much in the way when it comes down to the headwinds. Obviously, anything that happens in the States is going to affect what happens in the UK and the rest of the world. But I don't really see anything too bad, you know, that's going on in the States. I mean, obviously, valuations got a little bit overblown, but that didn't really happen in the UK. You know, when I'm kind of comparing stuff in the States to the UK in a lot of ways is still undervalued, and it was held back by Brexit. So now Brexit is kind of, you know, moving to the next phase. And we've got a vaccine rollout which is working pretty well. You know, 50% of the population is vaccinated, so the economy is getting back on its feet domestically. Then I think the FTSE could well be an outperformer. And you know, and actually, I think Europe could be an outperformer in comparison to the States. So I'm looking at 7,000 before I reassess. But until then, I'm just going to buy it up. I'm buying it up at 2% increments. So you know, if it goes from 6,600 down to 6,480, I'm buying, and then I'm just going to buy at 2% increments all the way down, and you know, because I very much doubt we're going to get back down to too far below 6,000. I'd be surprised. It could happen, but I'd be surprised. So I'm quite happy just to continue to buy this one up, mate.
Ash,
no problem.
Lewis, to answer your other question, mate, we're opposing at the moment, aren't we? I'm still thinking that there's a little bit more left in the dollar, and you're thinking it's run its race, yeah?
No.
Well, that was yesterday.
No, all I was saying was that there was a technical level that the dollar might be at, but no, I think that there's a pretty good chance that the dollar gets back up to around about the 94.75 level, maybe 94.70. Yeah, so I think the dollar's got another. I mean, couple to go. That's the dollar index, of course.
Yeah.
So you know, I'm looking at the dollar index around about 94, 94.50, 95, so somewhere in that area. So within that kind of dollar range, if you like. But yeah, sell zone starts at 94, but I think it could go all the way up to 95 as far as I'm concerned.
I can't put my dollar index up here because trading view only allows me, because I didn't pay enough money, obviously, to open one chart at a time, and I've got it open on another computer at the moment, so I can't.
This is the dollar here, and because of the pattern, you know, that to me looks like a neckline potentially. So I'd be looking at that, you know, with the dollar. So this to be seen, I think, at least once this year, at least, I think is likely, and that is around about the 90, between the 95 and 94. 50 area. So yeah, that's what I'm looking at with the dollar, just a bit more upside. There's obviously some resistance here, but I think it could get up to the next phase. And if it does, and you see that, then that would look even better, you know. But it's probably the time to trade it if it tests the neckline from above, you know, the current trend line from above. I think if it's
yeah, I'm the same. I think that breakout earlier in the week is a bit too strong to ignore.
Yeah, I agree. That looks about right to me. So the dollar comes back here. I think it's going probably higher. Whoops. I think it's probably going higher from there. Somewhere.
Time will tell.
Yeah, it will. It will. Yeah, it will. I mean, there's nothing that's been said. If you think about what's driving the markets right now, there's certainly nothing that's been said by either Yellen or Jerome Powell that has driven the dollar back down again. So that would probably hold. And yeah, you know, I'm quite happy for it to happen. I'd quite like gold to come down a little bit further. But you look at the gold chart on the weekly, still looks pretty negative, doesn't it? Especially with, you know, this is only the current bar, and it looks worse when the current bar's forming, because you would have thought that gold could have at least got up to 1770 before weakening, maybe a little bit lower. You think it would get up to around about 1765 before weakening. So that might still happen, might edge forward. But gold's in a bit of spot of bother right now, mate. And where I was, you know, with what I'm doing with the FTSE, Lewis, is I've just got all these buy areas in. I would have been happy to do the same with gold, but I've kind of lost faith in it in this area, and I'm now looking to do something similar if gold pops down to around about 1550. I'm talking about the futures, which would be pretty close to the spot. But yeah, from 1550, I'll be doing something similar with gold, because again, I think gold's going higher ultimately, but I think there's a chance this could come down first.
Interesting.
Yeah. Yeah,
you'll keep me up to date on that, because I won't be following.
Well, this is the thing with it. Yeah, I mean, you make a good point, mate, because I can't watch everything. You know, there's only certain things I can continuously keep my eye on if I'm going to watch them in any real detail. So there's times that, you know, I'll open up a Euro Kiwi chart or something, and there'd be a massive opportunity missed. But I have to say, those opportunities will always be missed for me, because I can't focus on everything with any real commitment. I've got to focus on a basket of things, and I'm watching gold closely. I'm watching the FTSE obviously closely, and the Nasdaq and some of those indices. I'm watching oil pretty closely right now, because that's for me where I'm going to find the opportunities. You know, that's where I'm mining for information. But yeah, gold I'll keep you posted on, mate, and Bitcoin, of course. I'm watching that one.
Yeah, look, I'm not that interested, to be honest. I just thought I'd run that past you.
Oh, okay. Fair enough,
all right,
mate.
We should get out of here, because I've got to have dinner, and we've got to meet again in what, 3 hours?
Yeah, something like that. Two and an hour and a half, I think it is.
Is it? I thought it was 2 hours. I thought it was 11:30 your time.
Yes, it is. Sorry, mate. Yep, got it. Just open it back up again. Yeah, I'll switch in a couple of hours. Yeah. Okie
dokie. I will go and have my dinner. I might even have a glass of Pinot Grigio. I think I'll have a glass of Pinot Grigio, and
enjoy.
I'll catch up with you in a couple of hours. I will. I'll be posting in the Telegram group, guys, if there's anything that needs to be done. So if you're in there, happy days. Swissy Yen, if you're still in it, I see no reason to change right now. If there's a pullback, then I'll be looking to get in there as well. Thank you, John.
Thanks,
thank you, Lewis, in particular.
Yes, yeah. Thanks for being the guest of the day, Lewis.
Thanks for
really interesting conversation. Yeah, and let's hope we can open up some doors.
I hope that helped some of us.
Yeah, it absolutely did, and it might, as I say, it might open some doors. Jeff and I'll talk about that when we meet in a couple of hours, how we can extend this out. But yeah, thank you for your involvement, mate, and everybody else that's in the room. Have a great weekend. Stay safe, and you know, do your homework. Thank you to you, Angel, for supporting us all week, as always. Stellar job. And thank you to you, Jeff. I will speak to you in a couple of hours, mate. But for trading wise, I will see you next Monday.
Cheers, buddy.
Thanks, guys. See you on Monday.
Have a lovely weekend, everyone. Bye-bye.
See you, Jeff. Bye-bye.